We'll start. And if you could just confirm by a show of hands that you can see my screen all okay. Okay. Okay, guys. Well, good evening to everyone who's joining us this evening. Thank you for joining us from the comfort of your homes. For those that don't know who I am, my name is Daniel Gurr. I am one of the senior consultants here at Quantico Group. Appreciate there in the background, you've got HJ Collection. They are a partner of ours that we will be speaking about this evening. But I represent Quantico Group, we're a UK multi-asset class introducer, acting as an ambassador for both businesses and high net worth and sophisticated investors. We basically bridge the gap between the two: businesses that are effectively looking to work with investors and sophisticated and high net worth investors that are looking for opportunities that would be outside of the traditional paradigm of investing. We tend to look at areas that show higher appreciation against the cost of living. So we really address the key issues of money depreciating in conventional areas. Obviously, tax issues, very much so in this country. So we look at enterprise investment scheme initiatives as well. So we are fairly broad: real estate, green energy, energy infrastructure, sustainability, luxury assets, commodities, precious metals. Big proportion of what we focus on is the fixed income sector, which is effectively what we'll be discussing this evening. Okay. By the way, if I am going too fast, or if for whatever reason the audio or the visual does decline, obviously please do let me know. We will have a Q&A session at the end. Generally speaking, we have close to nearly 2,000 individuals joining us this evening. So it's going to be difficult for me to get through all questions, but as always, do feel free to speak to your consultant or email through to ourselves, admin@quanticogroup.com, and we will get your questions answered. So this evening, we're talking about HJ Collection. They're a UK property development company. We've been working with them for quite some time. I'm pretty sure those who stayed up to stay in tune with financial news and media or have attended the Landlord Show are probably fully aware of who HJ Collection are. They are one of the fastest growing property development companies in the country. They've been Landlord of the Year 3 years in a row. They have a portfolio now circa £150 million. They've repaid £32 million back to investors, which I'll show an article that highlights that for last year. In addition to that, the pedigree behind HJ Collection, we must mention Mr. Rees Meny, founder and CEO of the company, Forbes 40 under 40, as well as named nominee Entrepreneur of the Year by Barclays Bank. Okay. In addition to that, he has a wealth of experience behind him, both on the investment side as well as the construction side. And we'll delve into that a little bit further today. In terms of the market, also, without moving forward, I do need to mention that they are a key sponsor to the West Ham United Football Club. So hopefully that doesn't put you off in any way, shape, or form. In terms of the business model itself, again, we will go into it a little bit deeper throughout the webinar this evening, but fairly straightforward. They convert commercial blocks into residential apartments. You have a massive undersupply of residential homes here in the UK. I think it was back in 2020, the UK government set out to build 300,000 residential homes on an annualized basis. And I think last time I checked, they're building circa 150,000. So massive shortfall with a growing population. There is an undersupply. And as long as that is the case, that falls into the hand of HJ Collection in terms of their model. So think derelict commercial blocks, office blocks within your home counties, only within the UK. They convert these spaces into residential apartments, targeting young professionals, like I said, within your home counties. Okay. Just to also mention, guys, as always, the views and opinions expressed are for informational purposes only. Obviously, it does not constitute a financial advice. The opportunity, as I said, there is a structural imbalance. The UK housing shortage is estimated at 400 homes. Government targets are consistently underdelivered. Rental demand is at a multi-year high. It's actually an all-time high since records began. Stabilizing rents, improving developer margins is effectively, falling into the hands of HJ Collection. And you have got a significant amount of institutional capital being pushed into the UK residential market. BlackRock recently pledged over £1 billion worth of investment into the UK residential market, further complementing the buoyancy of the UK housing market, as you can see there. Key takeaway always remains, as we all know with property, demand continues to significantly outweigh supply. Okay, supply is not broken. Supply is effectively broken. It's not the demand. The demand increases every single year. We have a chronic shortage of property in this country. Who are HJ Collection? They're a UK-based real estate development company. They're focused, like I said, commercial into residential conversions, portfolio approaching £150 million, £32 million back to investors. This isn't their first rodeo. This will be their 6th successful bond launch that we'll be discussing this evening. Landlord of the Year, 3 consecutive years. Don't want to repeat myself. We've discussed Forbes 40 under 40, as well as the nominee of Barclays. The strategy itself, acquire undervalued commercial assets within their network, secure planning, reposition, repurpose, convert into residential units, exit, refinance at a higher valuation. So just to briefly touch base on that, their average uplift in terms of from commercial to residential is 45%. So what we're saying here is they borrow private investor capital to acquire the block. They use that capital to also convert that into a residential apartment. Then once that block or once that particular site is now residential apartments, they refinance with the bank. Okay, banks will give 70% of the project's value. So as long as they're in excess of 30%, they're effectively pulling 100% of investors' capital out. Now, a key question that I'm sure is going to come up later today is, well, why don't they go down to the bank and borrow the funds from the bank? Now, it's not like taking out a residential mortgage, owner-occupier for you to live in. This is a commercial block. So the type of finance that you'd be looking at is what's called a bridging loan. Bridging finance is very expensive, 1.5% on a monthly basis, 2% on a monthly basis wouldn't be out of the norm. In addition to that, the terms on bridging finance is very strict and stringent. What I mean by that is they have the ability to call this finance in with very little notice. You're talking 6-8 weeks, maximum 3 months in property. Having finance called upon inside 3 months is an absolute, it would be no one could make that work in terms of business. So not only is it cheaper to borrow from private investors, obviously the average term is 4 years. So as you can appreciate, once they cycle out of that first project year 1, it's going into the second project year 2, it's going into the third project year 3, fourth project year 4. So they're actually recycling your capital 3-4 times as an absolute minimum. So if you think about average uplift 45%, they're doing that 3, 4, 5 times in some cases over the period of the capital being invested. That's why it makes sense and that's why it works. Obviously, we'll show a couple of examples in a few moments in terms of previous track history and results, highlighting that 45% uplift from commercial block into residential. Proven track record, so it's actually more than 15 sites now, acquired nationally, 650 residential units delivered or currently in development. Again, that gross development value is up and around 150 million now, and the return to investors at 32 million. Okay. This is actually one of their sites here in St Helens, which we'll touch base on in a couple of moments. In terms of the track record, all of this is available on their website as well. If you go to HJ Collection, previous track record, if you speak to your consultant that you're in contact with via Quantico Group, we can show and outline that for you further. But just some numbers there. Stafford, been to that site many times myself, just over an hour to London from Euston Station. Purchase price 480, total cost of the development just over £1 million, and the GDV that they've received on that was 1.65 million. Okay, sorry, total cost being just over £1 million. This is the example that I'm looking at here. So purchase price 480, total cost inclusive of the development cost was just over £1 million. So as you can appreciate, a circa 60% uplift. And they do this over and over again. They retain absolutely everything within the portfolio, have the potential to exit. I mean, a pension fund would snap a portfolio like this up. Private equity would snap a portfolio up like this. Family offices, they buy the income. Who wouldn't want that income? But the same token, they retain absolutely everything on their refinancing model. It enables them to do that and build cash flow, which obviously is good for everyone involved, both the company themselves in terms of building out their operations, but also back to investors. That's how they can pay the interest on a quarterly or biannual basis in terms of once your capital's invested. Couple of other examples there, as you can appreciate, fairly sizable, 124 units there in Bolton, 65 unit conversion there in Halifax, 105 there in Society House, West Bromwich. Now, this is available for everyone to see. If you simply typed in HJ Collection Maidenhead, go to the news part of Google, you'll see this in the news. Okay, this site was recently purchased for just over £3 million. They got planning on it, and it's just recently been valued at £10.75 million. So just to say, acquisition 3.3, converts it. Well, they haven't even put a hammer through the door or any site construction banners, anything in any way, shape, or form. All they have simply done is change the purpose via planning permission, and that has a RICS chartered, so Royal Chartered Surveyors, valuation at £10.75 million. Okay, obviously you've got the projected costs in there, but that has not started yet. That is what's really key. They have the network, they have the ability in terms of being a cash buyer to pick up these sites. I speak to Reese, who, like I said earlier, is the founder of the company. He said there's another 2, 3, 4 sites mirroring the Maidenhead that they could literally acquire and do the same thing with. Okay, so if you're sitting there thinking, okay, where is the security? Well, the security is very much on the business model. UK housing is a very buoyant market, has been for a number of years, and will be going forward. Supply and demand, single most important factor from a macroeconomic point of view, will underpin and keep the UK property market buoyant. Okay, yes, you might see oil prices volatile, equity prices volatile in the news off the back of the influence within the Middle East at the moment, but we all need somewhere to live. And I'm sorry if I'm sounding very opaque or so straightforward, but UK property is as buoyant as it gets. And with their model, acquiring these blocks, converting them into residential apartments is effectively what makes it secure for the likes of ourselves, putting our hard-earned capital into this particular opportunity. If I sit my money in the bank, get 2-3% a year when the cost of living's up around 4-5%, and they're increasing the monetary supply by another 3-4%, your break even on an annualized basis is 7 or 8% a year in terms of depreciation. So 2-3% in the bank does simply not cut it. Okay. Only difference here in terms of what we're doing is we are becoming the bank. Okay. We are effectively becoming the bank in terms of lending the money into the property market. Exact same model that the banks use in terms of you taking out a mortgage. Okay. They lend you the money, you buy the property, you grow the value. They effectively have a charge over the property. If anything happens, obviously they repossess the property and use that as collateral against the debts. Okay, hence the term as safe as houses. I think that rolls quite well into security. So if you are sitting there thinking, okay, business model, great, no property, tell us something we don't already know, Daniel. In terms of the security aspect of things, they are partnered with Blue Water Trustee. Okay, Blue Water offer trustee services. Okay, again, we can show you this on Companies House of HJ Collection 6. Go to the filing history and you will see the words registration of charge. And you will also see the nature of that charge. So they are an independent security trustee, Blue Water. Like I said, they're not associated or are they a sister business to HJ Collection in any way, shape, or form? Their role, very similar to the bank. When you take out that mortgage, they have a charge over your property. If you do not meet your obligations, they repossess the property. Why? Because they have that charge. And second to that is because you have not met your commitments as the borrower. Okay, exact same circumstances here. If they are not happy, if they get reports from investors like you and I, they have the ability to repossess the property, repossess the undertakings and the properties in terms of the assets, hence asset-backed phrase that we're using with this particular opportunity, sell those assets to repay investors. Okay, now, their assets, as we've just highlighted, approaching 150 million, are worth, especially in terms of HJ Collection 6, okay, are worth circa 2.5 times, 3 times the actual debt obligation. Okay, so what I mean by that is their asset value is worth 2.5 times, 3 times in most cases what their debt exposure is. Okay, so in that case, even if the property market slid by 20, 30, 40%, the fact that their assets are worth so much more than their debt liabilities is what makes the capital asset-backed. Couple of examples in terms of in the press, obviously different acquisitions. HJ Collection announces acquisition of commercial development in Guildford. HJ Collection bids to restart St Helens. We spoke about that earlier on. Abigail Court, Lowestoft turned into new apartments. Like I said, these guys are being seen and are very much so recommended by experts within the market as a key player and a reputable player in terms of the property development space. You've got the article here, and it might be a little bit hard to see. This is, like I said, I think it's over a year old now. Returns 30 million to investors. Okay, that's 32 million now. But like I said, in terms of history in the press, you've got that there. HJ Collection successfully returns 30 million to investors. In terms of why now, I think there's always a good reason to be investing into an opportunity like this. I mentioned volatility in terms of financial markets. I'm sure you'll draw your own conclusions yourself, but the fact that you can forecast a bit business expenses in terms of incomes, the way this particular product works. Previously, bonds have paid over a 48-month window, 15% biannual interest per annum. So it's 15% per annum, so 60% over the 4 years with a biannual interest payment. And previously, before, they had a 17% per annum bond over the 48 months. This was all previously before. Okay, we will send across the information memorandum, risk disclaimers, so that obviously you can understand HJ Collection 6 as well. Okay. But yeah, the reason in terms of why now, obviously, like I said previously before, they were fixed returns. Also, in terms of the property market, rental demand heading to an all-time high. With the rising population, we can only see that getting stronger and stronger. Okay, just to summarize, proven track record, we've discussed that the strategy is literally a cookie cutter. It doesn't get any more straightforward than how I've explained it. It's not any more complicated than how you've understood it. In terms of the fundamentals of the market, that's all fairly straightforward as well. In terms of the next steps, like I said, our allocation has not gone live as yet. It will be announced in the next couple of days. Okay. With regards to the full information on the opportunity itself, please do speak to your consultant. The pre-reservation is oversubscribed. So obviously we do apologize in advance for any disappointed investors that miss out this time round. We are very proactive as an entity, so we're always looking to build relationships as we do, make introductions where relevant. So we will always keep you informed. We'll always do our best to jump on the webinars. host company events in terms of face-to-face events as well. Good point on that as well is HJ Collection do facilitate site visits as well. If you actually want to get the steel caps on, the high vis and the helmet and get down there and actually have a look at the site yourself, you can. We can get that arranged. That's not a problem at all. In terms of ourselves, like I said, we will do our very, very best to keep as many of you as happy as we possibly can. But now looking at things at the moment with, let's have a look here, 2,206 investors, we are not going to be able to place all of that, but we will do our best. Okay. So we will skip through to questions now. Like I said, I'll do my very best to get through as many as I can, but I'm not going to get through all of them. I don't want to keep you guys for too long on your Wednesday evening. So please, we do invite all questions, do email us or have that conversation with your consultant. So I'm just going to switch this across so I can actually see the questions. Oh, sorry, I've just muted myself. Okay, so we'll just start off here. I've got a question here from Richard. What is the maximum investment allocation into HJ Collection 6? Okay, so the maximum at this stage is £500,000. However, that is likely to come down to 250,000 just based on availability. Okay. Next question I have here, anonymous attendee. How many units in total does HJ Collection own? So it's circa 650 in terms of units that rooms that they have. Okay. With regards to the full portfolio, like I said, HJ Collection's website, previous track record, and I believe there is another section there that talks about their portfolio as well. Okay. I have a question here from Barbara. Where is investor security? So as discussed, it's an asset-backed investment. So Blue Water trustee have a charge over the company's assets if in the event there was a liquidation or there was a default, they would simply repossess the assets to replenish investors' capital. Okay. We have a question here from AJ. Is the interest rate fixed? So yeah, previously before the interest rate was fixed. Okay. Okay. So I have a question here from Joanna. Okay. I spoke to someone at the landlord show a few weeks back from HJ Collection. They mentioned there was changes to HJ Collection 6. Okay. So in terms of the changes compared to HJ Collection 5, I think the only change is on the income. Previously, before it was biannual, so 6 monthly, and HJ Collection 6 is quarterly on the income. So the interest would be paid quarterly. Okay. So next question here I have from Drew. How do they manage deal flow? So that's a really good question, Drew. So relationship is a big part of this market in terms of having access to councils, having access to the deal sourcing side, but also being a cash buyer puts them in a very, very strong position in terms of being able to strike on undervalued assets as a cash buyer, obviously puts them in a privileged position. Okay. We have a question here. Let's have a look here from Alistair. Can you confirm the average uplift? So if the question's relating to the uplift from commercial into residential, the average uplift is 45%. Okay. So we have a question here from Penelope. Would planning permission have an impact on the timing of investor returns? So with regards to HJ Collection, they are not making any major structural changes. They are building boxes inside boxes, and they utilize the permitted development rights that we have in the UK. So that mitigates a lot of that. And obviously timing's everything when they are paying the interest rate that they are paying on the capital that they have borrowed. So a lot of the risk analysis is done before they've actually committed to the sites. So they know full well that they are going to get it through, or they've either applied for planning or they've had a planning surveyor go through there to mitigate all of that. So a company the size of HJ Collection, that is definitely something that's mitigated. It's something that they know full well. Like I said before, it is a cookie cutter. It is boxes inside boxes in terms of how they build things. Question here from Mo, why don't they borrow from the banks? Okay, so Mo, we did cover that at the very start. So in terms of commercial finance, it's not like taking out a residential mortgage where you would be paying, circa 4 or 5%. This is specialist finance because obviously it's a commercial block and they're converting it. So the type of finance that they would be using is called a bridging loan, and the cost on that, circa 1.52% on a monthly basis, hasn't been unknown. And that's on a monthly basis. So you're talking circa 20% on an annualized basis. And they can call that capital in at very, very short notice. So that's very high risk for any business, especially within property. So why do they use private investors? A, it's cheaper. And obviously they have the flexibility that the capital is invested for the fixed term of 4 years, where they will recycle that capital into 4 or 5 different projects. Okay. Another question here we have from Kat. How can they afford to pay that interest? Well, look, like I said, the average uplift is 45%. The banks will give them 70% of the project's value. So they're pulling capital out. So they're pulling 100% of investors' capital out every single time because their uplift is well and truly beyond 30% contingency. And in terms of that, it has to be attractive enough for the likes of you and I to want to make that investment. If it was offering the same interest as what you're getting in the bank, there wouldn't be sort of any motivation for you to do that. Okay. I'm just going to take one more question, guys, because it is literally pushing. I'm getting so many questions, pushing them all the way to the top. We will save these questions. We have the ability to save these questions, and we can email you with the responses. So we will do that. Like I said, it's very important to us that we do get all of these questions answered. So the last question that I have is from Kevin, and it is, can I reinvest the dividends? Okay, so in reference to the quarterly interest payments, no, that is paid back to you. And HJ Collections don't just offer their loan notes forever and ever. When they do, like I said, there is obviously, they're always in much anticipation. So once they're fulfilled, that's it, they're fulfilled. So it's not an open-ended fund or an open-ended raise where you can just continuously keep investing. They have the property that they're buying, they have the GDV on that property, and they have a reason for the capital that they're borrowing, because obviously that is to purchase that property. Okay, so that money would be paid back to you, but there is also a growth option as well. Okay. Thank you very much. We're going to leave it at that for this evening. Thank you very much for your time. As always, hopefully that was informative. I know a lot of people are excited about the launch of HJ Collection 6. We will look to facilitate as many transactions and introductions as we possibly can. If there's any further questions, please let us know. And without further ado, I will sign off this evening. So all the very best. Take care, and thanks again.